So what has become an up and down cycle continued with the up portion of that cycle today. So nice little rebound today. In today's market outlook video, I'm going to break down the likelihood that we can bounce up to new highs and continue this intermediate run, or the increasing odds that we might have that we might be already in the preliminary stages of an intermediate decline. So I'm going to show all of that in today's video, kind of what I think will end up happening. I tell you kind of what I'm expecting and why I'm expecting that based off of all these patterns I'm showing you. As always, we'll break down intermarket analysis, sector rotation, market breadth, all those indicators that help us get our idea of what we expect the market to do and where to go with that. And then our trade idea is a stock that's in a sector that didn't do so hot today. The stock has been really bullish, but has been in its own intermediate decline of about 14-15%. And we're going to talk about, as it's basing now, how to trade it at a significant level of support. So let's go ahead and get started. Today is Wednesday, August 6th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see the intermediate line still falling below market sentiment, below the 80th percentile. So again, two minor red flags there. Obviously, they become bigger red flags if the intermediate line were to cross out of bullish territory, and especially getting into bearish territory. That's when you get intermediate declines, right? When the intermediate line gets in the bearish territory there. So obviously we're not to that point. We are on a bullish near-term rally. We're on a near-term rally. Whether it's bullish or not remains to be seen, because the near-term line now again is avoiding still getting into the upper reversal zone. It's almost there. It's at the 77th percentile. In fact, it's barely up above the intermediate line. So just barely up above the intermediate line there. But again, you can tell it's it's weak, right? The near-term run here is weak. The momentum line rallied today, but still in bearish territory. So, this is not the strongest near-term rally, and would suggest, especially considering that, we might fail to cross above the intermediate line here, like significantly. So it would suggest that we may get a bearish near-term peak out of this. I mean, this was it's kind of maybe at best we could call an equal low point from the last near-term low, but it's actually kind of a slightly lower near-term low point from one near-term low to the next. So it's not it's definitely not a bullish near-term low, and if we follow that up with with a lower high corresponding to a bearish near-term peak that fails to get in the upper reversal zone, then you can see how the beginnings of a near-term decline can start, right? That's how it starts, right? You can see over here we had a bearish near-term drop. Momentum line was still a higher low, but it was relatively bearish, and then we followed that up with a bearish near-term peak. We did not get a higher high. The near-term line barely got its toe above the 60th percentile, and then we dropped to another bearish low. Intermediate line, the intermediate decline starts at that point. Over here, it started pretty much with a bearish near-term low. That got down to lower lows relative to the past near-term low. So that's kind of what we have. We saw that kind of over here as well as we started to grind into that bull tag. So again, there's indications that would suggest that this little near-term rally may fail. Now, granted, if you notice, coming off of this low point, the momentum line didn't get up there, and we had a pretty decent near-term rally to get off of that low. But that's a little different because we're coming off of a significant low, a washout low point. And a lot of times the momentum line, what's interesting is, while you kind of need a near-term, when you get these kind of midpoint drops, you kind of need the momentum line to get up into the upper reversal zone. A nice little bounce like we had right there, a nice little bounce like we had right here, a nice little bounce like we had right here. You kind of need those to get a good near-term rally to come after that. But you don't necessarily need them when you're coming off of near-term declines. You saw that here. You actually saw that here when you're coming off this intermediate decline. The momentum line didn't get in the upper reversal zone, and we had a pretty decent near-term rally briefly before pulling back. So that's this case. We're not getting a strong momentum move. The near-term rally, as a result, could end up petering out with a lower peak, and you can see how susceptible we would be to a lower near-term low, especially if that near-term line dropped all the way into the reversal zone, especially if the momentum line ended up being, extremely low. So that's something to kind of watch over the next couple of days. If we continue to fill in this gap with some rallies, or if we fail, right? And again, you kind of expect the bullishness until you see the lack of it, right? And so I expect that we'll continue to bounce up to new highs because that's just the trend we're on until I see some signs that we don't. And this would be a failure here, and the near-term line falling back out of bullish territory towards this pink territory would be a failure and a sign that we might be on that intermediate decline now. If you take a look at the Dow Jones Industrial Average, you see its intermediate line again crossing above the market, the near-term line, crossing above the intermediate line. The intermediate line has already crossed below market sentiment. And again, still the potential for a lower high and a bearish near-term peak, even though, we're flirting with the moving average. We're still 0.25% below that and kind of getting another bull tag here. But we're not really, we're not bouncing back up here yet. And then finally, the Russell 2000, which was up for a good chunk of the day, also ended up with another bull tag today because we were above the moving average yesterday, got back down below it today. Its near-term line did get in the reversal zone yesterday and is still up there today. In fact, it's pretty strongly bullish today. So you have the bullish crossover. So again, but again, we're still at a much lower low point right now, and lacking, that strong momentum push suggests that this near-term rally we might get might fail. That has a good chance. I'd say the probabilities are rising. They're pretty decently high odds that we're rising. So while we expect the bounce, we do need to be aware of the potential failure that, again, we would get as soon as tomorrow, right? It'd be tomorrow or especially going into the end of the week. That does it for our market outlook preview. To get the rest of the video, the full version, you can go to marketscholars.com. There's a link down below in the description, as well as the comment to join our foundation level. All of our subscribers get access to the market outlook video. Our foundation members get access to it for $29 a month, small price to pay, considering the value you get out of the market outlook trades that we do. We do one trade a day in each video. You also get access with that tier to our Market Outlook live video where we track them, manage the trades, and we talk about what we're doing with them. We close them. We tell you when we close them. And you also get access to our Market Outlook live trade tracker where we track the results of all of these Market Outlook trades throughout the course of the year. As I mentioned before, up about $13,000 over the first 6 months. We finally closed our last trade of the first 6 months. Again, we risk about $500 on the directional trades, $1,000 on the non-directional trades, and at any given time, I think the most I've had at one time is $13,000 at risk at any given time with all the trades that were outstanding, and we've about achieved that in the first 6 months. So again, $29 a month, $299 for the year. You get 2 months for free if you subscribe for the full year. So that's what you get with all of that. Thank you very much for watching. Make sure you check us out. Subscribe to the channel so you get tomorrow's video. You get notified when tomorrow's video comes on. Like the video, comment, share it with other people. Follow me on Twitter, Facebook, LinkedIn, all the social media accounts there. Like our stuff as well there. We put out more content in addition to the video, especially on Twitter. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.